Friends, this is Lucas here, of course. Now, in today's video, the title is very interesting. Cash is a bad investment. And I'll tell you this, it is true. Because what would happen if you would stock up on cash and wait maybe 20, maybe 30 years with it? What would happen to the cash? Well, you know that what happens. We've got inflation. There's always more inflation in the world than there is deflation in the world, meaning that things become more expensive. And what happens to the cash? The amount stays the same. And that's why cash is a bad investment. Cash is never a good investment. If you have a business running and you think, with the money that I make with my business, I put it on a bank, and let's pretend that a bank does give you interest for that. Let's just pretend that, okay? We're not in this world that the banks do not give you any interest anymore. Let's pretend that the banks do give you interest. Even then, the number that stays on your bank account doesn't grow over time. Stays the same every time. But the moment you invest in something that will grow, there you have it. All of a sudden, we're not talking about the amount of money you have, but about the value that you own. And this is a different thing, because cash itself, the value of cash always goes down. Never goes up. Nobody just says, you know what? If we take a look at 1933, so in 1933, the Golden Gate Bridge was built, I think it was like $37 million back then. And they say the moment we take a look at right now, it would be over 700 million already. If we will build the same bridge today, there's so much inflation already. Nobody says, hey, your same dollar that you would spend in 1933 is worth more. Less. It wouldn't grow over time. Money always becomes less. But if we take a look at the bridge right now that the bridge doesn't do anything, but the bridge, there's been so much money invested, it doesn't grow. What does grow is your business that you owned in 1933. That is an interesting fact. So if you start investing, you should start investing in things that grow in value, not fall in value. And this is why you should never invest in cash. Cash is a totally nonsense thing. Cash is just a currency that we need, to value someone. Like, hey, thank you very much for the job that you did. Here's some cash. And with the same currency, with the cash that you get, you can buy something else that is actually of value to you. Money itself, completely necessary. Completely bad of an investment. Now, that's why I have a course called Grow Your Money. It doesn't say grow the cash or invest in cash. It says grow your money, because you need to have your money grown. And how do you grow your money? If you invest in things that are productive. So what you need is productive assets. Assets that will bring you money. And this is why your home that you live in is not an asset. The home that you live in is a liability. It takes money out of your pocket because this is not a productive asset. Your home that you live in doesn't bring you money into your pocket. And that's very simple. The moment something becomes a productive asset, it's a way to make money, not to take money out of your pocket. So this takes money out of your pocket. But the moment this is not your home, but you own, I'll just wipe this one out as well. Let's pretend that you own 3 houses, 3 properties, And these properties, other people use them for their business. Every house brings in money. Every property that you own brings in money. All of a sudden, then it becomes a productive asset. And this is very important. Now, the interesting part is, if you cannot start with an asset like a home or a property or a business, what you could do is you could start owning stocks. You could start owning stocks. You can own a share of the house. Now let's pretend that that the business has 3 homes and they have 100 shares, or even 300. They have 300 shares for all the 3 properties that they have. And let's pretend that you can buy 30 shares. All of a sudden, that means you own 10% of that business. And with the 10% of that business that you own, this will bring in money for you. And this is very important because you have to make a very careful choice. Money is scarce. So the money that you have is very scarce. You can only make one choice with the money that you have. So what you need to do is, how can I use that money carefully? Now it's important to think about how you use the money. Now don't be too scared of using the money. This is also what happens very often. So I've got clients saying like, Lucas, I'll tell you this. I have about 120 euros that I could spend every month on an investment. Should I buy one stock or should I buy multiple? And I'm like, well, that's a very good idea, but be aware that you only have 120 euros per month to spend on investments. So what you could do is, of course, think about it very carefully how to spend it. Because if the asset that you're trying to purchase using that investment money that you have, if this business is not making money, if there's something wrong with the business, then what happens with your asset, it doesn't become a productive asset anymore, but it becomes a liability asset. It takes money out of your pocket, or it's just dead. It just doesn't do anything. It doesn't grow, but it doesn't die as well. Okay, that's worst case scenario. It doesn't take money out of your pocket, but it doesn't grow at all over time. And that's very important. That is the third step that you need to take, consider and think about as well. Diversify. So let's pretend that you have that 120 euros. Let's pretend that you have that, okay? How could you spend this way? You could do it, for example, 2 times 60. You could. You could do 3 times 40. You could even do 4 times 30. You could. There are different ways. But what you need to think about is you need to diversify your choices. You need to diversify your productive assets. Because if you don't diversify your assets, what happens is, if one business falls out, let's pretend that one business falls out. In this case, your original 120 euros that you had, in this case, you lost 120 euros. You lost 60. You lost 40. You lost 30. They always, you know what Warren Buffett says, and this is an interesting one. Warren Buffett says diversification is the protection against ignorance. Because if you tend to ignore things and think like, you know what, I did a great job in finding a great business to invest in, or a great stock to invest in, if it doesn't, diversification will save you. Because let's pretend that you invest that 120 bucks in 4 different funds, in 4 different stocks. All of a sudden, if you lose, it's 1/4 of your whole portfolio. But if you invested in one, you lose 100% of your portfolio. And this is the reason why diversification is the protection of ignorance. This is a very important one. Diversify your portfolio at all times. Now, I'm not saying that you should look into maybe 4 different businesses and think like, you know what, this is quite a lot. Well, specialize in 4 areas, for example, and then dive into those 4 and be a specialist in those 4. You don't have to learn everything. The only thing what you need to do is to know what you're good at. What are you good at? Study those things. Because this is also what happened to me. Like, what are you good at? The thing is, you need to accept your own mistakes. I'll tell you this. What happened in my investing history that I have, it's only past 13 years or so that I've been doing this. In my history of investing, what happened is that I invested in raw materials like gold. In the past, it seemed like a very great idea back in the past. But I'll tell you this, is gold a productive asset? You know what they say? You know what Warren Buffett also says about gold? Gold doesn't do anything. The only thing it does is shine. The moment people are scared, they tend to invest in gold, thinking, you know what? That is something that will keep its value, which is completely nonsense. Gold doesn't keep its value. Gold goes up and down, so it doesn't keep a certain value. Is it a productive asset? Absolutely not. Doesn't do anything. Gold is just a different way of saying it's cash. Let's pretend that you could have all the gold in this world. Well, I just did a short calculation just a moment ago. If you would have gold, you would own all the gold in the world. You would have over $7 trillion in money, in value. Well, with $7 trillion, you could wait a century. 7 trillion doesn't get any more. Stays the same. Yeah, maybe it grows a little bit with inflation, but it's absolutely not the same if you could use $7 trillion to invest in businesses and then wait a century, wait 100 years. If you found successful businesses using those $7 trillion, I'll tell you this, it's far more than $7 trillion then in 100 years' time. So is gold a productive asset? Absolutely not. Was I diversifying my portfolio? Absolutely not. My mistake was investing in raw materials like gold. In the end, what happened? Nothing happened. I waited a long time, and the time that I spent on it was the time that I wasted my money and my investment in. So this is why accepting your mistakes is also a thing. You know what? Saying to yourself, hey, I made a mistake, shouldn't do it again. But hey, what happened, happened. And this is something that you should do as well. Because from making mistakes, you have to learn. And learn every day you should. If you want to stay up to date, if you want to stay ahead of all the competition, you should also be learning every day. Don't only invest in productive assets and believe, you know what? I've done my job, I've done my research, and now it's my time to sit back and enjoy the money that's coming in. You should absolutely sit and enjoy the money that's coming in. But at the same time, you should continue learning every day. And if you haven't learned enough, if you haven't learned the rules on how to do this, on how to invest your money correctly to make money tomorrow, why not learn today and start with my course, Grow Your Money. It's a course that teaches you why cash is a bad investment, how you can start investing in productive assets, how you can start diversifying your portfolio, teaches you what mistakes you should avoid. And if you do make mistakes, and I'll tell you this is going to happen to you as well. Even with all the guidelines that I give you, even if I take you along hand by hand, I'm taking you along step by step, you're going to make mistakes. And you got to start accepting the mistakes that you made and keep on learning every day. This is my method of making money for more than 10 years already. So if you're interested, go check out my course, Grow Your Money. You can find it on my website, lukasshu.com/GYM. It stands for Grow Your Money. Go check it out. Got a cool video on that telling you how it works, what my course does. And of course, if you like this video, give me a thumbs up because, hey, this is my way of teaching you why you shouldn't, invest in money. Leave it on your bank account, for example. You should absolutely start investing the money that you have and make good choices. I thank you very much. I'll see you on our next video, of course. Be sure to share this video with your family and friends if you believe this is a good video. And, you know, if you like the channel, of course, just consider subscribing as well. And leave a comment down below in this video if you like this, if you think like, hey, this is a cool thing. And if you have any questions, of course, be sure to reach out. I thank you very much, and I'll see you on our next video.